All right, guys. So let's talk about liquidity from the trend line perspective, right? So we started a series last week. It's a seven-part series. We're talking about trend line liquidity all through, and now basically we're still continuing on this, right? So we started with liquidity, the whole introduction to liquidity from the candle perspective and from the market structure perspective, right? And I kind of give you guys a picture of what liquidity looks like. And today we are going to continue with that. We're going to continue with that. So, like I said in the previous video, liquidity can be defined as any point in the market where um, orders are resting. That means orders are resting in form of buy stops or limit orders, right? Buy stops, sell stops. So, what do I mean? It means that the points in the market where buy stops are resting. That means, for instance, like if I am buying this market, so if I'm in a long position on this trade, right? My stop loss will obviously be, let's say I trade double bottom, right? So let's say I trade double bottoms, and then I mark my support level here, and then price start coming back there. Now, what am I expecting? I'm expecting that when price comes there, price should bounce off. That means my stop loss will be somewhere around there. That means my stop loss is there, right? That's what we call buy stops, right? So my stop loss is at that order, at that point there, right? Sorry, my stop loss is around there. That means that point, that place there was a point of liquidity. All right. Now, for those people that do break and retest, right, people that do break and retest, they'll be expecting that price will break here and then retest here and then go lower, right? So what will they do? They will put their sell stop here. Right? They put their sell stop here. So once price gets there, it will activate them and then it can maybe still can be somewhere around there. So they can put your stop loss as price is coming down, right? As price is coming down and it hits that point, it activates them and then they will expect price to do what? To move in their expected direction, right? So that's typical that I'm talking about. So an area which people want to get involved in a trade is what we refer to as what? Liquidity, right? Old highs, old lows, specifically, right? Candle highs, candle lows. I talked about that in the last class, right? So you must understand liquidity. It is where people want to get involved in a trade, either when they're putting their stop loss or when they're putting their sell stop or buy stop, right? Sell stop simply means that they want the market to break and continue downwards. While limit order means that they're putting their stop loss, their limit is below here. I mean, they're putting their buy here, their limit for stop loss is below that point there, right? So that's basically what they are doing, right? That is what we refer to as liquidity. Now we have understood that these areas are always targeted, right? Understand that areas of liquidity are usually targeted, right? These points are targeted, right? They are targeted. They are targeted by what? The smart money individuals or the market algorithm. The market algorithm has understood human behaviors and they've been able to know, okay, these are the points in which people want to get involved in the trade. That means they can use those points as what? Areas of what? Targets. Now, this now leads us to what we call liquidation. So price would want to liquidate those areas. Liquidation simply means that price goes to the area of liquidity and takes it out, right? What we call liquidation. So that means even if price wants to buy, for the fact that people would want to put their stop loss down here. So we usually see sometimes we see long weeks and all of that, right? So sometimes you see market do something like this to take out that low and then was reverse almost immediately. So if you have seen this, you understand what I'm talking about. This whole idea of price taking out this old low, right? This is the old low here, right? Price taking out this old low and then reversing. We call this what? Liquidation. Price has liquidated those orders. It has taken out the stop loss that was supposed to be down there. Right now, what if you were using a sell stop here? You have also been liquidated. How? It means that, okay, let's say that maybe you put your sell stop here, thinking that price will break and continue going downwards, right? Maybe you put your stop maybe somewhere around there, right? Thinking that price will continue going downwards. What will the price do? Price will come to that point, strip you in. So you're not selling. And what happens? It takes you out, right? So you can see that these areas are areas in which both buyers and sellers are what? Liquidated, right? So it doesn't matter what direction you are, as long as you're trading with this old low in mind, this liquidity region in mind, you're going to get liquidated, right? So that's what we refer to as what liquidity, liquidation, targeted areas, and what um um yeah, that's it basically. So now we have understood liquidity. I'm still talking about the previous video, right? I'm going to give you guys better perspective to what the previous video which we had, that is video one, right? So you will see video one somewhere around there. Or maybe at the end of this video you see the link for the video one, so you can watch it if you have not gone through it, because it's a 7-part series, right? This is part 2 out of 7, right? So let's continue. Now, what is trendline liquidity? Trendline liquidity simply refers to what a liquidity that forms in a trendline fashion. But there are people that trade this way, right? Whenever they see the market do something like this, they are very, very excited, meaning that they say 3 touches. So when price makes a third touch, they want to buy at the third touch, right? They'll say, okay, this is the first touch, second touch, and then they'll be like, if it's 3 touches, then they want to buy at this third touch. So usually, there are 2 ways they trade trendline liquidity. The first way is that they put their long position at the trend line here, I mean, we stop just maybe below a bit, and then they don't want to targeting this high as well. They take profits, right? This is the first way they trade trend line liquidity. Now, the second way they trend line liquidity that was breakout retest. That means they will draw out liquidity, right? They will draw it out, and they expect market to break and retest it. So that means they will draw something like this. They will draw out something like this, and then what happens? They wait for market to break the trend line. So when the market breaks here, they now have their trade. So they can put their sell limit here, maybe somewhere around there. I don't know how to put that. So I don't trade that way. So what happens is that they will expect price to do what? To bounce off this broken trend line, and then was continually going downwards, right? So this works sometimes. Now let me point out something, that I am not saying that these things don't work, right? They do work, right? They do work if there's context behind it. Right? I'm not saying that trend line does not work. I'm not saying that trend lines do not work. They work if you're in line with a trend and if there's context behind it. But as a smart money minded trader, we don't trade with those logic. We trade the opposite direction, right? So this is what they expect. When market breaks the trend line, it should come to retest and then will break to the downside, right? Now, the issue with this is that these things are done sometimes to trip in traders to get a trade before liquidating. Now, what do I mean? And this is the retail logic here. Right, this is the retail logic. I want to give you guys the perspective. So this is a retail logic here. Retail logic. Retail traders logic, right? Now, let me give you guys a smart money perspective to this, right? We have gotten the retail logic here, right? So this is the retail logic. Now, what about the smart money perspective? The smart money perspective is that when you see a trend line, you want to trade against it. That means if you see a trend line now, right? Right. You want to buy against that trend line, right? So this is a smart money logic here. So if you see a trend line, you are buying against the trend line, not selling. So typically, you're looking for maybe market structure confirmation above here, and then you're selling to target towards that particular liquidity there. So this is how it's smart money. This is smart money logic here, right? You target that liquidity, that's low. So this is how you're trading. You're selling with either that price should clear this liquidity. So maybe you can target here, and market price should clear that low, something like this, right? Taking out all this load. This is a smart money logic, right? Smart money logic, right? This is the first example. And then the second example is that if you are bullish, you don't use break and retest for your trades. You do the opposite. What do I mean? As price comes to this low, right? What do? As price breaches the trend line, maybe look for a buy, maybe a reason to buy down here, right? And then you're buying instead of selling. So this is a smart money logic here to this. You're looking for buy opportunities inside that low, below that low, right? And then targeting with the highs. So this is the difference between the retail logic and the smart money logic, right? This is the difference between the retail logic and the smart money logic. So can you guys see what I'm talking about? Right? This is the difference between the retail logic and the smart money logic, right? This is the difference, really the difference between retail logic and smart money logic, right? So I'm going to get a screenshot of this so that I can post it in my thumbnail, right? So this is the difference between a retail logic and a smart money logic. That is basically what you should be doing as a smart money minded trader. Right. Smart money minded trader. It's not like be trading with trend line and all that. So now we have understood this. So now I think we can go to look for real example. Let's go to GBP/USD. So see if you can see some good examples of this. I think maybe I should use the 1 hour chart. Should I use 1 hour chart? No, I want the chart to be plain too. All right, so this is what I'm talking about. So this is it. All right. So what do we have here? 1, 2. Okay. All right. Look at this here. Look at this trend line that was forming here, right? Trend line forming. What happened? What happened? Price breached the trend line. As price breached the trend line, what happened? Markets broke structure to the upside. So markets breached this trend line. Now gave a bullish break here. So this is a bullish break of structure here. So look at the bullish break. So markets give a bullish break here and then what? Bought to the upside, right? So can you see that? Now see another example here. See another example here. So this is a first touch. This is a second touch. Markets breach liquidity there, and I give a bullish break, and then what happened to the upside, right? That is an example of trendline liquidity not playing out. So look at another example here. So someone will be like, hey, this trendline liquidity doesn't have drawn something like this to to do it. But what happened? The price hits the trend line. What happened? We had a bullish break here. Right? There was a bullish break of structure inside there. So we had a bullish break here. Right? What happened? Market came to what? Break the structure. They tested this other block here. This other block was retested. Yeah. So what happened? Market was bought to the upside, right? This how they traded the smart money minded way. And so instead of selling at the trend line, we instead bought, and it was a very, very aggressive, right? So this is basically how smart money minded trader trade. For now, I'm already seeing liquidity building. So what can I see? I'm seeing liquidity building already, right? It's already building. I think that's been taken out already, so or let us assume that they can do something like this. So possibly the market can dump lower and then give us a bullish push to the upside, right? So okay, so that is basically it. So you have to be very, very smart with all these things, right? I'm looking for more examples so I can show you guys. Yeah, look at this. So let's look at this. It's always repeating itself. We don't trade trend line liquidity. So look at that one here. We do like okay, trend line, like first touch here, second touch, what happened? The opposite happened, right? Markets instead of market to continue downwards, there was instead a bullish break to this side. Look at the bullish break here. Market give a bullish break downwards, so bought aggressively. See another one here. Someone that this is a trend line liquidity here. Trend line liquidity, what happened? Market swept the trend line liquidity, and what happened? It's buying. So can you see what I'm talking about? So market swept the trend line liquidity. By this trend liquidity that should have maybe extended to this point here, right? So market breached and then was see a buy. So that is basically what we're talking about. We don't trade trend line liquidity. Because 1, 2, in fact, if you want to give a tech touch, you kind of reacted there. What happened? It did not go higher. Sometimes price can just be very, very firm. Sometimes price can do something like this. So it happens sometimes. Sometimes at this tech touch, price can act like it wants to buy. So because if you see this big green candle now, you'll be like, it's going to buy, it's going to buy. But what happened? It still dumped on you. So if someone saw this big green candle, the person will be like, yeah, it's going to buy. What happened? It dumped, right? So that is basically why you should be very mindful of this kind of setups, right? So I think I've spoken a lot. This is a lot about I've spoken. I've given you guys real examples. I don't like my videos to be so long, so this is where we'll be wrapping up. Please go and check your chart for more examples. If you want to join our paid mentorship, we are currently giving what a 30. I don't know if it's 30%. We're actually giving our paid mentorship for just 69,000 instead of 90,000. So if you want to join us for a year, you can just simply use the link in the description, or just send me a DM on Twitter or wherever, and you can get it instead of 99. So this is the original price for the annual mentorship. It's a general class, yearly class. You can join us for 69 instead of 99,000. It's for 1 year, not a month. 1 year, 365 calendar days, 12 months, right? So just join us. We have amazing results. Please, you need the results, right? Time is going. So if you want to join us for just this little fee, just send me a DM or use the link in the description to join us. Right. So have a wonderful day. I hope this makes sense. I hope this makes a difference in your trading performance. And yeah, have a great cheers and God bless.